I'll show you a company that, after the greatest success in its history, has over time turned into a fallen angel. A very heavy fall. The company has fundamental weakness, a huge problem. We want to buy an asset cheaper in the hope of later selling it for more. The basic main mistake of most investors all around the world. Under no circumstances should you buy this stock. This is the only strategy that in the long term will lead you to a profit. Friends, good day. You're on the Old Trader channel. My name is Vladimir Karashev. I'm a trader from Russia, and today I'll show you a company that, after the greatest success in its history, has over time turned into a fallen angel. And most importantly, friends, we'll talk about how not to end up with positions in a fallen angel, how to see the moment when a company has started to fall, and most importantly, from the perspective of the market price, how not to fall along with the company, how to avoid a situation where you're left with an open position, realizing that the company is turning into a fallen angel. And today we'll look at such a company. It's called PayPal, a company that started trading on the exchange back in July of 2015. So that's practically 11 years of market history already. And my friends, let's start from the end. At the moment, the company is trading at the level of $41 per share. These are roughly the prices at which it went public 11 years ago. And my friends, here's an important point I want to draw your attention to at the start of this video, which is to notice what a dramatic loss of capitalization there is in the company. Right now, the stock is trading at a price of $41.25, while the company's peak values were at the level of $310. So we have very little left, about $10 down, and we'll have a loss of capitalization of 90% from the all-time high. Now, my friends, once again, it's very important. I want you to hear me. Big capital, big money, investment funds never buy a stock on a downward trend. I talk about this constantly, I say it a lot, but my friends, it's the basic main mistake of most investors worldwide, trying to buy a stock at a very good price, at a cheap price on sale, when we have a dramatic drop in the stock's price. These, my friends, are the basic mistakes of investors in all the world's markets, because investors don't look at rising trends, but want to buy a stock that's falling in the hope of the end of the downward trend, a reversal and a rising trend. So, my friends, this is a basic mistake. It's the main mistake of working in the stock market. Once again, trying to be smarter than everyone, trying to buy an asset that nobody wants. Breaking the fundamental law of the market, always buy with the trend. Trend is your friend, and when the trend is moving against you, when it's a downward trend, unfortunately, we're just ordinary people and we like to buy an asset that's gotten cheaper. But if we're talking about the stock market, it's a huge misconception to try and buy a stock that's going against us. And as a result, look at what we have starting from September 2021. So for almost 5 years now, we've seen a downward trend in PayPal. And it's very important to pay attention to the dynamics of the decline. Notice how large these red candles are. This is a very heavy drop. The company has fundamental weakness, a huge problem. We're moving linearly down without breaking the highs of previous monthly cycles. And even here, notice that when we saw the price movement slow down at the end of December 2021, we couldn't even break the previous month's highs. Right here. And we continue to go down with very large swings. And so, my friends, a picture like this already tells us that you should never buy this stock. But unfortunately, I'll say it again, our problem is that we want to buy an asset cheaper, hoping to sell it for more later. My friends, this is a huge mistake, a huge mistake. If you want to make money in the stock market, try to join the trending movements. Try to buy those stocks that are in trending upward movements. That's the most important thing. This is a fundamental difference. Proper market work is when you buy an asset at $10, then at $12, then at $15, then at $25, and so on. This is the only strategy that will lead you to profit in the long run. But if you want to buy a stock using the opposite logic, at 10, at 8, at 7, at $5, and so on, then over time, a huge losing position will accumulate in your portfolio. And there's a very high probability that at some point this stock will turn into a fallen angel, becoming what we see now with PayPal. When again, after 11 years of market history, the company returned to its IPO price, losing almost 90% of its capitalization. And, my friends, most importantly, I'd guess that the company will never return to those historical highs it had in July 2021, meaning we'll never see the company at $310 per share again. So, once again, pay attention to this. Don't ever let fallen angels into your portfolio. That's all for now, friends. Good luck. Always trade with the trend. Talk to you and see you soon.